Hello guys, welcome back to the channel. Thank you for tuning in. So I took a position on oil yesterday. Now I took this live on Trader Nick's stream, so I'll do a little pop-up there for you. But yeah, just waiting on this oil candle close. If we can close below. So the reason I took this trade was because we saw a really nice downtrend here and we saw a huge rush to the upside. Now I wasn't convinced that this was a change of trend. Now, the reason I think that is because there's been a cut to OPEC. The cut to OPEC's 2024 forecast was the first since it was made in July 2023, and it comes after mounting signs that demand in China has lagged expectations. The Organization of Petroleum Exporting Countries global demand forecast reduction for 2024 highlighted the dilemma faced by the wider OPEC Plus group in rising production from October. So essentially, that's very bearish for oil. Now match that with inflation problems and oil could be heading further to the downside. So we did see this move to the upside. That again, that wasn't a convincing sign to me that oil is now bullish. So I was looking at $80 a barrel. So around this point here, I sent a tweet out saying that I want to day trade oil to $80 a barrel. That was the target. Now we did come up to $80.5. So that was fine. But then we saw this consolidation. And I noticed that we are at a really nice level of structure. Let me just make this a bit more clear for you here. So you can see we're at a really nice level of structure. Price failed to break above this. We were still in a downtrend on the H4. So you can see we've got the 200 above the 50. They haven't changed. And then the final entry factor for this was this H4 candle. Now, this is something I explained on the stream, but I don't think I've explained it on my channel really, on how I identify an engulfing candle. So if we draw a line from the top of this consolidation, which is here, and then we draw a line from the bottom, which is right here, this bearish candle closed below this range or this consolidation. So to me, in my book, this classifies as a bearish engulfing candle. Now, it can work the same way if it's bullish, but obviously in this case, it's bearish. So I executed once we had this candle close. Now you can see we are moving nicely to the downside. So if we go to the daily time frame, you can see that we also rejected the 200 daily moving average. So we crossed over back here in July. So this was now a bearish market. We've come back up and we did break above, but we very quickly came back and rejected this moving average. So that was a really nice sign to me. I just missed also on the H4 down here, we have the RSI that was overbought. So for anyone that trades my strategy or anyone that knows how I trade, you'll know I look for these trends. I look for an oversold or overbought RSI, and that's my trigger to get in. So you can see we are really, really overbought on the H4. And then on the daily, now this one's a little bit ugly. Which is why I don't have it marked up, because I didn't really use it because it didn't follow my rules. So normally with the fib, I like to see, I like to draw it from wick to wick, which you can see here, it does line up quite nicely with the 618, but it's not perfect. However, we drew, if I broke my rules a little bit and then moved it up to, drew it from wick to body, which again is not how I draw it, it does match this fib level really nicely. Now, given that it if we were a little bit on the side of breaking rules, it still lines up. And then if we did do it properly, it still basically lines up. The candle closes were in the 0.618. So that was a confluence, but it wasn't strong enough for me to base a trade around that alone. But it was a nice little, a nice little key driver there for me. Essentially now we are risk-free. And the reason that we're risk-free on this position is because we have CPI today. Now, CPI is going to be a big one, or potentially a big one today, because it's going to be quite pivotal in terms of what the Fed does. Now, I'm not going to go into that in this video. I think it's a separate topic, but the Fed is obviously looking to cut rates. So it's now how aggressive are they going to be with their rate cutting process? And I think CPI will be a big indicator towards that. So if we get, negative CPI, positive CPI, whatever it is, I want to be secure in this position. So in the Discord today, I suppose it was yesterday actually, so we can see here, I was looking for, I will wait for a top wick to form on tomorrow's daily candle. So obviously this was yesterday, so that's today's daily candle. and we did get this. So you can see we've had this wick to the upside here. So this position is now risk-free. Now, the only reason I'm going risk-free is just to secure the position for news. I don't normally be this aggressive with my positions. However, I don't want to sit through news that could very easily whipsaw us out. There's no reason to do that. So what I'll do is I'll check in with you again once we're out of the trade, or once the trade's running in a bit of a different way, so I can give you an update. But yeah, this is oil so far. I really like oil. It's a very, very easy pair to trade, really, or very easy asset to trade. The price action is generally very clean. So yeah, that's about it. So I will check in with you very soon. Okay, guys, it's check-in time. So we have closed out of our oil position. Now, there's a few reasons we closed out, and one of them, the main factor, is because we held through CPI, sorry, not PMI. Now, initially, actually, we did see a bit of a bullish reaction. So we saw price started to come up, but as I said in the first segment, the position was risk-free, so I didn't really care too much. But we can see we did start to have this bullish momentum, which was the initial sort of impulse by the market when CPI was released. However, very quickly we saw this meltdown once we saw CPI get digested by investors and by the market in general. So that was a great sign. So we decided to, hold on and just let the position run a little bit further. So we secured roughly 1% to 1.35%, depending on the entry obviously by the members. This was, of course, a signal. So yeah, great trade. There's not really much else to discuss on this one. The reason we closed also wasn't just because of, obviously, we held through news. It's because we started to see the RSI become oversold. And in general, I am actually looking to get long on oil. Now, this is mainly a long-term hold. So I'm looking to potentially get in at this 0.5 level here. And sort of ride it back up into these previous highs through here to sort of 84 roughly. So we'll see how that one goes. Obviously, it's not ready yet. We're not quite there. But yeah, overall, a really, really clean trade. The R&R wasn't anything crazy. The gain wasn't anything crazy. But the trade in general was very, very nice. Profit's profit at the end of the day. The trade was executed well. There's literally zero drawdown here. So yeah, really clean. So congratulations to anyone in the Discord that did catch this one. If you're not already in the Discord and want to catch these signals, you can join the link in the description. So yeah, thank you for watching, and I'll check in with you again soon.